and what's their outlook? But are long-term investors taking their eye off the ball if they're only focused on corporate results? Wells Fargo advisor Scott Wren says he still has a slight cyclical bias for stocks, but Street Talk advisors Lance Roberts warns that even though he's not bearish, risks outweigh rewards right now. Okay, Scott, I'll get to you. You're a little more positive here. How do you invest in a climate where there is this uncertainty? I mean, you could argue there's always going to be uncertainty.
Well, Liz, definitely, but we're at the point of the cycle. We've had the big run-up. We've had the big earnings gains. Now people are wondering, is this recovery sustainable? How much is earnings growth going to slow? What's the Fed going to do, and when are they going to start to do it? So you're at a natural kind of a timeout period in the cycle. And the way that we want our clients to participate in this is we don't want them leaning real hard cyclically toward this recovery as we did for the last, really most of the last 2.5 years. We want them to be a little more neutrally positioned. I think the next leg up in this cyclical bull is likely to start maybe late this year or in the first half of 2012. We want them still a little bit cyclically positioned, realizing that, hey, we're only at the middle of this cycle. We have more to go. Earnings are going to continue to grow. The economic recovery is going to continue on. And when the Fed starts to hike rates, which, you know, who knows, that might be the second half of 2012. It's not going to be at a very fast pace.
Well, they're going to be talking about it. Hopefully we'll get a little bit of warning, probably a lot. Lance, let me go to you on a couple of things. You know, market reaction has been fairly positive. We are now closing out the week, at least for the Dow, up 3 out of the last 4 weeks. But over and over we hear that it's a stock picker's market. You've got to get real specific about names that you're going to be investing in. You can't play the indexes anymore. If that is the case, what do you like?
Well, that's the thing. And you have to look at this really from two perspectives. From a short-term perspective for traders, absolutely, you know, you can pick the hot stock and do okay on a short-term basis. I manage money for the average American, you know, the guys trying to save for retirement. And our indicators have been telling us now since late April, overweight cash, overweight fixed income for the moment, still be long equities, that's fine, but lower the volatility risk. You know, use balanced investments over straight equity index investments. And I do agree with your other guests that, you know, longer term things are going to shape up. And when our indicators tell us that the reward outweighs the risk of investing, and, you know, we've got Greece, we've got the debt ceiling, we've got all these issues out there. When we get past these and things look better, great. I love stocks that have a big dividend yield and good earnings like Johnson & Johnson, Procter & Gamble, IBM. Those are great companies.
Okay, but Scott, well, let me jump in because Scott had, if you waited back during, let's say, March of 2009, when every stock chart in the world now shows that was the low, till you had a little more visibility, you might have missed some real opportunity. What are you picking right now in the hopes that you can really buy low?
Well, you know, I tell you, actually, there's a couple of stocks, Liz, whose names I provided. Two of those are, one is Danaher, the other is Walgreens. So I wanted to kind of give you a mix of something a little more cyclically sensitive, something a little more defensive. And both of those stocks had, over the course of the last year or so, they've gone up, they've had an okay run, but they pulled back here recently to levels that I think people should start taking a look at those again. So, you know, Danaher, industrial exposure. They certainly also have a dental life sciences exposure. So you've got some defensive along with the cyclical. And then Walgreens, you know, they took a hit yesterday after this Express Scripts Medco merger news came out. But I think that overall their stores are running a lot more efficiently. The generic drug introduction is going to help them. And I think whatever little differences there were between Express Scripts and Walgreens, they've had arguments before in the past. They've worked it out. They both kind of need each other, and I think it's going to work out going ahead. So I think you need to have a portfolio that has a mix of good dividend-paying stocks with some cyclical aspects to it. But also, you want something that has a little bit more
gentlemen. Absolutely, it is a stock picker's market. That's what I was saying, and you both have great picks. Thanks for coming on Bulls and Bears, guys. Lance Roberts, Scott Wren, gentlemen, thank you.
A Fox Business.